Let me now bring on board Mr. Bhat, Managing Director of Dalton Capital Advisors. Mr. Bhat, good morning and thank you for joining us. Record high, we've gone to 7,500 plus on the Nifty on strong volume, strong flows. What's next? 7,800, 8,000 or 8,500?
Well, everything is possible depending on what the government does. But as of now, that hope rally has sort of graduated into an acceleration rally now. So we just have to see the action on the ground. As of now, I think the best that the Modi government can deliver has been more or less factored. So now we have to see today's...
Why do you say that?
Well, the market has had almost a 25% run in the last about 4 months. And so, I mean, the only thing that has changed on the economy, nothing really much has changed. It is just the hope, just that he will be able to deliver on whatever were the shortcomings of the previous government. I think that has taken it thus far. And now I think the budget is the next big statement where, the intentions will be made known. And then the economy will turn around only very slowly. I don't think there are any quick fixes for that. So therefore, the market will keep waiting for that. But it is priced in quite a lot of the sort of potential turnaround of the economy on account of very good policy measures that the government will come about with.
Mm. But do you think it is going to be a harsh budget with no populist measures this time around? Because the first 2 years perhaps the government is going to be more stringent and tighten their purse strings than, letting them loose.
Given that, I think Mr. Modi has said that, more or less made it very clear that he wants to be around for 10 years. So I think the harsh decisions had to be taken in the first year itself, first 1 or 2 years, because after that you will have state elections and all kinds of things. So I think it will be a harsh budget, but I think the market will probably like that, because a harsh budget is something that we have not seen for some time. And so something needs to be done to correct the long-term course of the economy. And I think he should be able to deliver that. If he delivers that, the market will cheer it even more.
What could be a hard action? I mean, let's think about it. A hard action is that you cut the expenditure. Expenditure already has been toned down by about 2 lakh crores in last 2 years. What the economy needs currently an economic kicker. It needs an economic booster. Where will that booster come from? Because if you cut on expenditure, investment will not pick up. If investment will not pick up, economy will not revive. So do you think, Arun Jaitley will have to do a very, fine act of balancing?
He will need to, but I think there are a lot of, the government itself in the past has said there are lots of non-merit subsidies. So that is something that is a hard, there are lots of subsidies that are not going to the right people. So I think that needs to be addressed, and that can itself release enough money for the government itself to start investing, because I think they have to take the lead in investing, because the corporate sector would probably take some time to go to the drawing board after the policies are enunciated to think of the next binge of investment. So I think the government has to take the lead, and they have to find the money from cutting down very harshly on non-merit subsidies, which may not be very popular with the middle class, but that needs to be done.
So the PSU trade, you're saying, would hold till the budget?
PSU trade could hold. I think especially the oil subsidies have to be addressed very, very strongly, right, in the budget.
Rather than getting worried about where markets would move in next 3 months, what are the valuations at FII 15, do you think it's time now really to look at a slightly longer term view? Valuations and expectations, they never move hand in hand. Fair point. Right now stock prices have run up and expectations are high, but earnings eventually would catch up.
But we should catch up with the lag. So therefore, I think typically the market swings into one extreme of this pendulum, and that is probably what is happening. Now after that we will have a budget, and the budget will probably address these issues in very lucid terms. And after that, the market will make up its mind as to whether there is further time for it to really discount future earnings growth, or it has done too much, and so therefore it might correct. So I think the market will sort of be volatile. With sort of huge expectations, and then sort of some reality check, and then again a new bout of expectations. I think that's how the market will go.
So you think ONGC is still a good bet even after the run-up that we've seen of late?
Well, we can't really say that he will let go all subsidies, and probably there could. There is generally, even internationally, if you see, super sort of profits are taxed. So therefore, even if all the subsidies are removed, there could be some form of taxation, because finally it's a nation's wealth. You cannot be just given to investors on a platter. So I think there would be some sort of a correction, a major correction on the subsidy angle. It may not necessarily translate dramatically to the PSU earnings, but I think the government will find more money to invest and change the sentiment.
And this correction would happen pre-budget or post?
Well, I think there could be a correction pre-budget because it has run up quite a lot, and the budget is still about almost a month away. So therefore, there could be some corrections in between. But I think the run up to the budget, there will be further expectations. I mean, expectations will be fueled further, and after that, I think there will be reality check.
I'll tell you what I'm worried about. I'm worried about price action in industrials. Names like BHEL, Crompton, Greaves, Cummins. Industrials always do well when the new capex cycle kickstart. Currently, that is not the need of the hour. What are we suffering with? We are suffering with excess capacity utilization and no demand. In the first leg of economic recovery will only kick in when demand is back. So if demand is not back and capex cycle is at least 2 or 3 quarters away, what explains the underlying price action in industrials?
Well, I think it's a general buoyancy in the market. There's nothing very specific about that because even if, say, as you say, even if there's revival, I think capacity utilization has to increase quite dramatically before people, and of course, once bitten, twice shy. They've had problems with creating capacity and not being able to find enough demand, and also even the capacity itself not being able to be commissioned because of various problems. So I don't think they will go back to the drawing board in a great hurry. So the market has probably over discounted a potential turnaround in the capital goods or in the industrials. I think that will come back probably sometime after the budget when the market gets aware that it is probably another 2-3 quarters away before really some action can be seen on this front. But typically that is how markets behave. So when there's buoyancy, I think all boats keep.
It's a rising tide which is taking everything up. Right now, rather than really engineering a new capex cycle, the need of the hour clearly is to de-bottleneck all the policy problems and kickstart all the projects which are suffering because of land issue, environmental problems, or because of gas and coal linkages.
Mr. Bhat, most retail investors, while they're jumping into the market only now and inquiring about it, but the biggest inquiry is, has all the money been made, and do they have just this 1 month from now till the budget to make the maximum gains that the whole year could throw up for us?
Well, I think the maximum gains the whole year could throw up has already been earned, has already been made from, say, February to now. It's almost 25% plus. So I think hereafter there would be probably some further incremental gain to be made in the run-up to the budget, possibly, or even if the budget is very good immediately after the budget. But after that, I think the monsoon and the macro issues will start getting factored with the market, and I think there would be sort of a consolidation. And even otherwise, a 25% run-up, like what we've seen in the last 4 months, would not be sustained unless there is some sort of a correction and
so
some sort of consolidation.
So this is the last chance from now to the budget?
I think this could be the last chance, but it is not sort of big money, the sort of money that people have made from February.
At a time when bears are completely extinct, every time I want a bearish opinion, I can always rely on you.
No, I think over the next 5 years, it will be a phenomenal market. No doubt about it. I think it will be fantastic. But in the short run, a 25% run up needs to have some sort of correction or consolidation before it can go to the next level.
Is the right way to look at this market is that we should not map the absolute return. So on paper, a 25% return will look big.
Yeah.
It's breathtaking.
Yeah.
But the market was oversold.
Yeah.
And 10% of the appreciation out of the 15-25% is only mean reversion.
Possible, but I think even if the market was oversold, I think it was for very good reasons. That time there was no hope. So now the hope rally has led into, as I said, an exhilaration rally. And I think there is some sort of reality check that is required. Because all said and done, the best of policies cannot really turn around the economy in a great hurry. The economy has a life of its own, so it will probably take at least 2-3 quarters for all the policies to show effect in terms of probably potential earnings growth or the macro fundamentals changing. So till then, I think there will be some sort of a consolidation, probably a correction, and after that I think...
But that brings me back to my original thesis that expectations and real economy, they never move hand in hand.
Yeah.
For the moment, stock prices are running slightly ahead of themselves,
yeah.
But it could remain like that because post the election verdict, the India rhetoric has changed so much that you have to participate now. I mean, there is no other choice but to participate.
Yeah, I mean, if you have a 5-year view, you have to participate, there's no doubt about it. But in the meantime, if you really think that the market is going to be a one-way street up from now, that probably is not the case. I think for a long-term investor, I mean, it doesn't matter if there's a 10% correction. What's the big deal? So if you're going to make a 50% return over the next, say, about 5 years.
So how much more return from, or rather upside from here till the budget? 200 more points, or you think 8,000 is a possibility?
It cannot be much more than that, because even as you see, as we discussed, the budget has to be harsh if it has to be really, turning around the economy in the medium term. If it is going to be sort of more doles and more giveaways, I think the market would be disappointed.
Okay.
So is there any pocket where you think sustained gains, or at least, gains that would consolidate would be made? And do you get the sense that perhaps ONGC and Reliance would be a good bet right now?
They could be all right, but I think there's a lot of hope in the prices now. As I said, I don't think it's any government's duty to see that the ONGCs of the world have to be given lots of dollars. While even if they give them very, very good prices, like matching international prices, and remove the subsidy, they might be phenomenally profitable. But that's not the way the world works. So therefore, I think nobody can say that I will make super profits and distribute to investors without participating, without allowing the government to participate in the profits. So there will be some sort of super tax or something like that needs to be there. I think you cannot allow investors to make all the money. So I think society also has to make some money. So therefore, I don't see that there's a huge upside to this just because there might be decontrol of oil prices. There will be other ways in which the government will try to find find some profits.
So you're happy to pay more tax?
That is not a problem. I think one should pay more tax if you need development, if you need investment. I think one needs to prove. And after all, tax is going to be paid out of profits. So if you make more profits, you pay more tax. What's the big deal?
I can argue that 33% actually, really pinches you.
Just want to talk about, this whole argument about money now chasing mid-caps, and that's where the money is to be made. Do you also hold that theory that it's not about the large caps anymore? They're only going to go up, 10-20%. If you are looking at 50% moves, mid-caps is the place to be.
It is there, but it is more difficult to make money out of mid-caps because it's difficult to find out who are the ones who can really last the innings. So therefore, I think large retail investors should probably concentrate on the large caps, and much better to be more sure-footed in making the 50% return over the next, say, 3-4 years, rather than 1 in 100 chance of making a 500% return in the mid-cap.
Okay, there's some fresh price volume breakouts, and the big one is there in Reliance Infra, followed by Power Finance Corporation. Century Textile is the other one. Now, Century Textile, the story always has been very simple. They're sitting on a lot of land bank in Mumbai. Power Finance Corporation will benefit, should benefit if the power sector picks up. And for Reliance Infra, well, the logic is not Mumbai Metro. Let me assure you folks, the logic is that Reliance Infra is a good quality engineering company. Their balance sheet size is decent, and if the economy picks up, they can easily raise capital to fix their balance sheet. Mr. Bhat, are you a big fan of some of these asset owners? The fact that now it will be easier for corporate India to raise money via the debt route, via the QIP route, via the equity route. Maybe they can fix their balance sheet. The problem for some of these companies is not order book. It's not the asset. It is cash flow and debt.
Yeah, I think that's the way an economic turnaround happens. Balance sheets are stretched, corporate balance sheets are stretched, so they have to address it with further equity infusion. And the market going up like this would help them, reset their balance sheets, and then, sort of keep the powder dry for the next bid of next sort of move in terms of bidding for new projects. So they need to restructure the balance sheet by infusing some equity, and the market gives them the opportunity to do that now.
So you will not buy into a Reliance Infra or a Nagarjuna or a HCC simply because the environment has changed and the sentiment for fundraising is easy. You will not buy these stocks.
I think these companies have to restructure the balance sheet. I think that is essential. So therefore, it may not be that once they restructure the balance sheet, their potential for further sort of price performance is much better than participating in it now, I think.
What about IT? Is this the time to buy into IT stocks, considering the world seems to have written off them right now?
Well, there's a contrary view that is possible, that there are some of these which have been beaten badly. That's a risk that you have to take, that they will probably do well under sort of restructured managements or whatever. That's a risk worth taking, but I don't know whether the market is in the mood to take such huge risks now.
But let's be realistic. The US economy is going through a renaissance in the manufacturing sector.
Yeah.
If manufacturing activity in US will pick up, they obviously would automate more, and that's where Indian companies would benefit, both on the services side and on the engineering side. So are you a big fan of what is happening in the US economy, and do you think the pickup in the US manufacturing sector will benefit Indian IT companies?
Yeah, they would. But you know, the days of 25-30% growth is all over. So therefore, now they have to be valued like, you know, any other sort of, almost like a utility with a slight growth. So therefore, the days when they were, you know, discounted at 25 times, 30 times,
they are no
times,
longer getting discounted at 25 times.
So they are not, because they are growing at 10% or sub 10%. You know, those days they were growing at 50%.
TCS is 28, Tech Mahindra is 25 plus, Wipro is about 14, 15 times.
I know, but you know, see the growth rate. The earnings growth is nowhere near that. I mean, so therefore they are all growing at